Good evening, everybody, and welcome to Metropole TV, the first 24-hour news business channel here in Kenya and in East Africa. This is The Smart Investor. My name is Ali Khan Sachu, and it's a pleasure today to be speaking with Ashok Shah. Ashok is the Chief Executive Officer of Apollo Investments. Apollo Investments, Ashok, has a number of holdings. APA Insurance
APA Insurance is the largest, and then we have got APA Life, APA Insurance Uganda, Apollo Asset Management, Gordon Court, which is the property which owns this building, and we are an associate of Reliance Insurance in Tanzania.
So really, quite a breadth of companies and interests.
Yes.
Ashok, what I wanted to first ask you about, you've been in this business for many years, you are a thought leader, you've been so innovative. But tell us, what does the insurance industry look like today? There's been a lot of M&A activity. What's exciting people? How do you read the landscape?
The insurance industry has changed a lot, and it's a little bit, I would say, right now the insurance industry is not in a very good shape, because what's happening is that we have got too many players, so there's a lot of overcapacity, but a lot of these players that we have, many of them are not even properly capitalized. They don't even have enough capital and so on. And if you looked at the returns that insurance industry gave in the last, as at 30th April, you will find about 20 companies were below their minimum capital requirements of 100%. Which means that they were obviously did not have enough capital to carry on business.
Are they allowed to carry on business when they are in that situation?
They should not really be allowed. But then the problem we have had was that the minimum capital requirements or the new risk-based capital should have come into effect in 2018. Parliament, for all its wisdom, to extend it to 2020. So the commissioner's hands are tied in trying to control the people who do not have enough capital. And what has happened is that we were hoping that if the 2018 deadline had happened, then we would have seen a lot more mergers and acquisitions. As you said, we've not had enough mergers and acquisitions. Perhaps we would have even seen closures of some insurance companies because they could not raise the necessary capital. But the other area that the industry has really become interesting is that we have had a lot of overseas players.
Every time I opened the newspaper, I'd find, a corporate action or a purchase, the entry of a new. Well, tell us a little bit about what's been going on that front.
Well, Kenya is one of the strongest insurance market in Africa. And if you look at anybody who is really wanting to come into Africa, besides South Africa, they would look at Kenya first, Nigeria second. Nigerian market is not as developed as us, but because of the large population, a lot more money there, people are very much interested in this market. But Kenya, because of the development that we have a very strong developed insurance industry. We also have a very low penetration rate. So everybody is hoping that by coming into Kenya, they will be able to increase their fortunes and to make sure that they can grow in this area.
So we've had private equity take big stakes in Britam, IFC, Swiss Re come in, Prudential, if I'm not mistaken. Yes. Have I covered?
No, they're quite. There's Prudential, there's Allianz, there's Metropolitan from South Africa, which took over Canon. They started off as the Metropolitan Life only, but then now they've taken over Canon, so calling themselves Metropolitan Canon. Then, as you said, Britam had a lot of new shareholders, including Swiss Re. Swiss Re is also invested in in Apollo Investments.
Why don't we use this chance just to describe your journey, because it's been quite a fascinating one from an M&A perspective as well.
Yes, we've had, in fact, we would have done about 3 or 4 M&As within our group.
In the lifetime of the business.
Of well, longer than the since in the 2002. Uh, Apollo Insurance started in 1977, and what happened was we continued as a small insurance company until the
This
1990s.
was in Mombasa, right?
We started off in Mombasa.
Yes.
In 1996, we brought the headquarters to Nairobi, and we also decided that we decided that seriously we have to grow. We can't be one of those small companies, and at that time the market was fragmented between the British companies and the local Kenyan companies. And all the business was obviously going to the British companies, and people like us were not getting much business. So we said that we must do something to grow, either organically or by merger and acquisition. So for us, we were very lucky that we were able to do a merger with Pan Africa. Apollo, what we
1990s.
No, we did it in 2003 and
2003.
2004. And what happened was Pan Africa had a new strategic partner from South Africa, which was really in life insurance industry, and they didn't know much about general insurance industry. So they came to us and they said that we would like to see if we can do a consolidation. So we agreed to do the consolidation of our general business. So Apollo's and Pan Africa's general business was consolidated, and that's how APA was born. And many people ask us, what is APA?
Yes.
And a lot of people say, no, it's nothing, but it is Apollo Pan Africa.
Okay.
And so we continued with Pan Africa. Then Pan Africa's South African shareholder was taken over by Sanlam.
Yes.
And Sanlam came in, and for whatever reason, they said that they would like to dispose of the shares in APA.
What year was this?
This was in 2010.
And Sanlam are listed on the Securities Exchange here.
They are listed in Securities Exchange. Then they were gone on to buy a general insurance company. And as you said, they've been making losses. Recently they made a very big loss, 3 billion or so.
That was bond market related.
Bond market related, and perhaps also some other reasons. But what happened was, for us, the opportunity for Pan Africa to sell the share 40% in APA was something of interest. So we needed the money. We needed money to buy out that share. And the interesting thing is in 2004, when our final accounts were done for the new merged entity, APA, Pan Africa's contribution was 16 million shillings.
Yes.
Because that year they made a bigger loss, which was taken over by APA. So their net contribution was 16 million shillings. In 2010, when we sold, when they sold their share to us, we paid 855 million shillings.
That was probably the best return they had on the entire portfolio.
50 times.
Wow.
For growth in their money.
And you know what? I'm glad you remember that, because I think if you create value for people, that's an outrageous example.
That's right.
Okay, so now you bought out.
We bought out. So we needed.
So now you're 100.
We needed that 855 million.
Where did you get it from?
So we talked to Livfrog was looking for an investment.
Yes.
PE fund.
They've come in a big way in the insurance.
They have come in a big way in insurance in Africa. But the interesting thing was they came in and they put in total 14 million shillings. $14 million. $14 million in Apollo Investments. And what happened was that $14 million, part of it went to Pan Africa to purchase their share. The other part was to grow some other new parts to put into a new life system, etc. And we got that money and a new partner, and they brought in quite a lot of values to us because they were very good in health and other areas. But then 3 years later, they saw that their $14 million could make them a lot more.
Yes.
So they sold that for that 27% to
For?
Swiss Re.
And do you know what was the price on that?
It was in the region of around about 36 to 40 million dollars.
Wow. So,
Yeah.
okay.
Yeah.
My goodness.
So
an IRR for them of near 30%.
that's right.
Whoa.
So they've done well.
So you make money for everybody, Ashok,
We
is
made
what
money
you're
for everybody. And so, for us,
So that's when Swiss Re came on your...
Swiss Re came on, and Swiss Re is now a very important partner as far as we are concerned, because Swiss Re is not a PE fund.
Yes.
They are a long-term investor. They come and add value, and they also help us in many, many areas. Our relationship with Swiss Re is twofold. There is the reinsurance side, and there is the investment side. And there is an arm's length relationship. So when it comes to reinsurance, we pay the same rate that anybody in the market would pay. We don't get any preferential treatment. But when it comes to the investment side, they sit on our board, they support us in different ways. So we gain from a lot of their learnings. So Swiss Re
So
is
they were a shareholder which had multiple vectors of value for
that's
you.
right, yes. So Swiss Re came in. So for us, now this was obviously a third partner that came in. And so we have done, in inverted commas, 3 mergers and acquisitions.
Wow.
But they've been quite interesting.
Yes.
And
So Swiss Re is today, what, the second biggest shareholder?
Swiss Re, there are only 2 major shareholders.
Apollo
One
Investments.
is Canmac.
Yes.
Canmac is about 55%. Swiss Re is 27%. And then the others are people with friends and family who own the balance.
And you are unique in that the size of your business, and it's not listed, most of your competitors are listed at the Securities Exchange.
Yes.
Was that a deliberate decision, Ashok? Or?
We've been thinking of doing an IPO. We've been doing, and we're really keen to do an IPO. But the thing is that when the time, with the Kenyan Stock Exchange, there have been 2 times when we thought we could do an IPO, the stock exchange has gone down totally. Right now it is again at a low end.
And the valuations for insurance companies
are all very, not good enough
Yeah.
for anybody to do an IPO. And the other thing about an IPO in Kenya now is that the retail investors are not very keen.
No,
They're not
that's a
very
good
keen.
point.
Because they've lost money when they put money in Kenya Airways, in Kengen, in Kenya, even in Safaricom. For many years, Safaricom was trading below
Underwater.
the IPO price. It's only, for the last 3-4 years that it's really gone up. So the retail investor has not been very keen. And when it comes to the other investors for an IPO, there are foreign investors who will come in. But with the foreign investors, you have to be very careful. Is that they come
The
in,
global conditions can
That's right.
change,
and they decide whether they want to stay here for long. So they will come in and out. So your share can, have a lot of beatings, as we have seen recently. But for us, an IPO is still an area of considering. But the other thing that we are also looking at is that we need to grow our regional footprint.
yes. So currently you're in Tanzania.
We're in Tanzania we have an associate.
Yeah.
Uganda is a
Fully
wholly owned
owned.
subsidiary.
And
Kenya, we've got a larger network of subsidiaries.
what markets would be attractive from putting more money to work in Kenya and Tanzania and Uganda, or expanding your footprint?
We'd be looking. We would like to buy the majority in our Tanzanian operations, because if we can buy the majority in Tanzanian operations, then we can consolidate
the P&L.
in the 3 countries, and it will make sense for us. Then we could decide to look at south or north. South would be perhaps Zambia. north, if Ethiopia opens up,
Yes.
that could be a
Are you
potential.
excited by that market? I see quite a few.
Not really excited because it's a very closed market.
Yes.
A very closed market, and people who have gone in there are happy to be there because it's a market which is very profitable. But then there is another problem that we have in Ethiopia is that foreign exchange is missing. So people cannot export, get out the profits. So that is the problem that we have to face.
Let me turn your mind back to the insurance market. Penetration, I always see we're like one, people always compare it to South Africa, right?
Yes.
Penetration is what, 1/3 of South Africa or
Oh,
even?
much lesser than South Africa. South Africa penetration would be about 14,
Yes.
15%. Kenya is under 3%.
So when you look at that, and this is what obviously is exciting a lot of people coming in,
Yes.
from your perspective, how does Kenya get to the South Africa level? What types of insurance needs to happen?
You see, the problem that the insurance industry is very insular. We are very competitive, and we do not really consider marketing outside the urban centers.
Yes.
What is happening in Kenya is that each one of us are selling to the same people uh, within the urban area. They are the people who are the only people who have bought insurance or know about insurance. We have never gone outside the urban area. We've not gone to the rural areas. We're not gone to the poor in the
But
slums.
Ashok, you have targeted that market, haven't you?
Yes.
Yeah, your competition has stayed
Yes.
in the urban, but you've been at the forefront of livestock insurance. It seems to me that has been one of your calling cards, that you've been intrepid, not scared to go to places other people have not wanted to go.
Well, Apollo and APA really are, we believe in innovation. And we also believe in areas where we think that we will be able to do business and grow our business in those areas. So what we have really decided that agriculture is very important for us. And so crop and livestock are something that we have started concentrating on. And we have started working with a lot of international players, international agencies who come and give us ideas and provide us. In fact, the MasterCard Foundation gave us a grant of $2.4 million.
Oh, really? When was that?
This was in 2016.
Yes, to do what?
To grow our business in the agricultural sector in the rural areas.
Yes.
So we have really started doing a lot of agriculture with smallholder farmers.
Yes.
As you said, with also with livestock, with the pastoralists in northern Kenya, and also we are looking at a lot of new areas that we can go in, including microinsurance.
Yes.
We've tied up with Azuri.
Yes. This is the off-grid
Azuri
solar.
they go and sell the solar systems, and we ride on their back to sell insurance programs to their clients. And we would now like to see if we can make an universal cover for Azuri, so that whichever client they have, they can start selling. They will give that insurance cover to them.
So it seems to me you've like unbundled insurance and you're rebundling it in a very innovative way, in the sense that you're
Yes.
bringing up MasterCard, you're bringing up technical know-how. So just out of interest, what kind of bench strength do you have in the organization that's able to think in this sort of 1997 Apple way, that think different and don't think like everybody else?
Okay, we are trying to build up capacity, but the skill sets are difficult to get in this country. But we have been able to manage on the agricultural side. We have agronomists with insurance background, so they are helping create insurance programs for farmers. Then for the livestock we work with ILRI, which has done a lot of research in that area. But what we see is that agriculture will be a big area of expansion. And what happened was we felt that as APA, we could not really look after the whole marketplace and be, in charge of the whole thing. So APA approached a few companies, and we have now got 6 companies which have joined us to form the agricultural group. So every agricultural program that we do is insured through the group. And then we, as APA, we will then purchase the reinsurance for the group. And the reinsurance is mostly with Swiss Re and Africa Re. And make sure that the group members are well protected, but at the same time, everybody starts thinking and growing the agriculture cake. Uh, because what it is that if we can get the Kenyan farmer uh, insured and they understand insurance, because the awareness of insurance is very limited in this country. When you go to a farmer, he will not even understand what insurance is. But by insuring his crop, paying the claims when they occur, and right now there is a payout for crops that is taking place
Because of the drought earlier in the
because
year.
of the drought.
And just explain, because it's quite impressive. You're literally doing it off satellite data, aren't you?
No, the agriculture we have changed.
Yes.
The pastoralist cover is also because of the satellite data.
So the satellite data tells you whether there's been rain or not,
Yeah,
and it's
yeah, because when we cover the pastoralist, we charge the premium per head of the cattle that the pastoralist has, but we cover not the animal.
yes.
We cover the forage on the ground.
Ah,
And then the satellite gives us data as to, by looking at the images of the forage on the ground, and through color and so on, is able to tell us when there is not enough forage. And when that trigger is reached, when there is not enough forage, what happens is that then we declare a payout, and we pay out to the pastoralist immediately. Similarly, but for the agriculture, we started with weather index cover, which was either deficient rainfall or too much rainfall. But then we found that it was difficult for the farmers, and even for us to explain to them that you only cover for one peril, and that peril might, now that peril depended on the weather station in one area. Now, weather station covers a 30-kilometer radius. Now, as you know that rain is not always.
you're saying the microclimates
There's
within that.
there's microclimates.
Was that the problem?
We had a problem. So what would happen is we would think that there has been adequate rainfall, and then the other farmers would say there has not been adequate rainfall. Now, our data is showing that there is enough, so we don't have to pay out. Farmers were really, they were up in arms, saying that they thought that we were fraudsters. So we decided to move away from weather and any peril index. So the only index we use now is an area index, but we give multi-peril cover. So we cover every peril that a farmer will face, except armyworm right now, because we do not know how it is going to be controlled. But except for that, we give 80% yield to the farmer for the failure of the crop.
Wow.
So a farmer, if they insure, every season they can get up to 80%, either by selling the crop, or if there was not enough yield, then we will pay the difference.
So that's tremendous, and bringing liquidity into far-flung parts of
Yes.
the economy, which is very innovative. And also, why don't you tell us, you were the first person to insure HIV.
Yes.
And for many years, I think you were the only one.
We were, I think for about 7-8 years, we were the only ones that covered HIV for health covers.
Yes.
What happened was Apollo, it was Apollo before APA was formed, we were doing medical covers. And what we found was that all of us had actually said that, we cannot cover anybody who is HIV positive. So we were rejecting claims from people who were HIV positive. And then as Apollo, we started thinking is that seriously, we are able to identify some people who are HIV positive, but we are not able to identify everybody who is HIV positive in the group that we have insured. So we would go to an employer and we will give them a corporate cover for their employees. And we found that, we would be able to say that 2% of the group is HIV positive. But then the government and the statistics were showing that, there was 16, 18% prevalence of HIV. So we said if our population, which should really be, the same as the national statistics, is only showing 2%, what's happening to the other
Yes.
14%? So as Apollo, we said that there must be something. I mean, we realized and we knew that doctors were treating people who were HIV positive, but not declaring them as such.
Ah.
So we were paying the claims anyway.
Wow.
So we said that, look, why don't we include HIV?
Yes.
There were two reasons why we wanted to include HIV. One is that we could go to the employer and say that we'll cover all the employees for including HIV, but you'll have to pay an extra premium because that was the cost that was going on. But the other thing is that by being open about telling people that we will cover HIV, we hoped that more people will come forward and declare their own status, and what would happen is that then they can get the right treatment, because HIV treatment, not any doctor can prescribe HIV treatment. You need to be specialized in and knowing what the person is having, and treating for the opportunistic diseases that HIV brings about. But if the doctor doesn't know that somebody is HIV positive,
They're not going to diagnose it.
they keep on treating them for the wrong thing. The costs really go up, but eventually the person dies. So we thought that by doing this, by making people aware of their own status, and then pointing them to the right doctors
Yes.
who actually specialize in treating HIV, we would then be able to make sure that they are open about their own status. And, I can prove that what we did was correct, because in our own employment, we had several people who were HIV positive. Now I'm talking about nearly 20 years ago. Some of them are still employed.
Wow.
And you can't tell the difference between them and any one of us.
Wow.
They are as healthy as any one of us. Because
That's a significant social impact.
yeah, we encourage
intervention.
them. We encourage them to live positively. We told them, go to the particular doctor. Don't, all you do is then go and get the prescription from a particular place and bring your bill, and nobody will question it.
Wow. That was
So,
revolutionary at the time.
So this was it, and so that one was that's where we were seen as an insurer, which was willing to take risks, which were beyond any other insurer was willing to even think about.
So that surely goes into your brand strength, your reputation as an organization. People will, I mean, that's worth millions of dollars, what you did there, right?
Yes.
I mean, and people I'm sure can still remember it. Now, tell me, what is the USP of Apollo? Balance sheet?
Well, not really. The balance sheet, we have a very strong balance sheet.
Yeah.
I think last year, APA Insurance gave to the holding company 600 billion in dividend. The previous year it gave 1.5 billion.
Wow.
So that way I think we are fairly strong.
Yes.
But balance sheet and our assets are not really the USP that we have. The USP that we have is that we have always been innovative. We have been willing to take on risks which others are not willing to look at. And thirdly is the relationships.
Yes.
We have got some very good, strong relationships. And what happens is that people know that when there is a problem, they can come and talk to us. And if we see that a claim is on a gray, there's a gray line, then we will give the benefit to the client and pay the claim. Because it's important for the client to know that we are, we're not being very fussy, and we're not going to hide behind the small print. Take the example of the claim for Jomo Kenyatta
Yes,
International Airport.
was that the biggest claim you've ever paid on?
We have paid it, and at that time when we paid it, it was $26 million.
Yes.
1.97 billion shillings. Now, what happened was, we'd only been on cover for 6 days. We didn't even know. I didn't even know that we had insured. I didn't even know that we had insured Kenya Airports Authority, and I saw lots of WhatsApp messages and so on to Twitter and showing the airport on the fire. And I was.
But at that point, you did not know you were the insurer.
No, I didn't know that we were the insurer.
There were dramatic photos, I remember. This is the terminal, right? The duty-free shops.
And we came in, and I came in and so on. Then the general manager comes and sees me.
Yes.
And he says, do you know that we are the insurers of Jomo Kenyatta International Airport?
How did you react?
And I said, really? And I said, when did we insure it? They said it came to us on 1st of August.
Wow.
It was transferred to us on 1st of August. We went on cover, and the thing is that 6 days later the airport has got fire. But the interesting thing was, our main reinsurers, as I said, has always been Swiss Re. We rang up Swiss Re and we said that, look, we have got this claim. We don't know how big it is or how small it is, but we need to we need to work on it very quickly. So we appointed a local loss adjuster, but then we also told Swiss Re that we'd like, because of it's a national institution. It's the airport. If something happens to the airport and people can't travel,
the whole economy would seize up.
We will have a big problem in our economy. So we said, could we also give us another international adjuster? So they appointed. They gave us 2 or 3 names, and we decided to choose from those 3 names one other one. So they came in as well. So we had 2 adjusters. But do you know that a claim of that magnitude normally would take at least 12 months to be sorted out? Because we had at some point we had 360 different experts. The adjusters had brought in 360 different experts to work on that claim. So it would have taken about 12 months to sort out a claim of that magnitude. We paid the full claim in 6 months.
Wow. And that's an important message. So that's the biggest one, and it's 6 days and you didn't know. What a story. God, that would have stressed me out. I wonder how that general manager approached you.
And then, when we all met, we met on that day and we said, okay, look, we have to handle this claim really well, because the thing is that we cannot afford to make any mistakes. Because it will be like it's a national institution, it's important to the economy, and at the same time, if we suddenly if we find technically something wrong with this claim, then we have to make sure that it is conveyed in the right way to the insured, which was the Kenya Airports Authority, because there could have been other reasons why the claim could have started, the fire could have started. We had brought in forensic experts and so on, just to make sure that it was nothing untowards in that fire, because everybody was worried about terrorism and.
That's right.
Yes.
And then, Ashok, let me ask you, we've looked at the insurance business. Can we also look at, there are other components to insurance, right? So first of all, there is reinsurance. Do you sit with risk on your balance sheet, or do you try and defray that risk, or how does it actually work? And are you a player in the wholesale reinsurance markets, for example?
Okay. Reinsurance is very important to the insurance industry. Insurance actually, whatever happens about insurance, insurance is about spreading the risk. And it is something that, is that we can take on many, many large risks, which are several times, the value of a risk could be several times the value of our own balance sheet. But what happens is that by using the reinsurance mechanism, we will now reinsure a lot of we will only retain a part of the risk which we are able to pay for from our own assets and funds directly. But otherwise, we will now rely on the reinsurers and their balance sheet to take the rest of the risk. Now, even reinsurers themselves retrocede. They have retrocessions with other reinsurers so that they can never be caught out by large claims. Like if you have, for the large reinsurers, claims like what we have in Kenya will not affect their balance sheet so much. It will affect us. If the Kenya Airports Authority, the Jomo Kenyatta fire, was not properly reinsured by APA, APA would have been closed down. That happens with every insurance company. But what happens is that for us, that claim was a very big claim, way beyond our balance sheet. Not way beyond our balance sheet, but obviously a substantial part of our balance sheet. But because we had reinsured it, the reinsurers took a lot of the claims, and to them that claim would have been a tiny claim. But to to the reinsurer like Swiss Re or Africa Re, the bigger problems is the catastrophe claims that we have.
Yes, this is like weather.
The weather, the hurricane.
Which seemed, according to the data I'd seen, to be happening more frequently than ever before in history.
Yes.
Yeah, and particularly the weather-related issues.
Weather-related. Now, when there was the hurricane in Mozambique, this is the first time it's come up that north.
I think it's the first time ever in that area.
That's right. No, it's the second time, but this particular hurricane was so strong. The previous one was nothing compared to this particular one, and it really devastated a very large area. But fortunately, it was for the insurers, it was not there were not many insured assets there. But for the people, it was a disaster.
Devastating.
Devastating for them, for Mozambique itself. It was really a sad thing. But if you look at the hurricanes that you can get in North America and so on, that affect Miami and so on, those are mega because they're most of the property there is insured.
Yes.
So what happens is that reinsurers insurers and reinsurers have to pay a lot, but you will find the accumulation for individual reinsurers would be very, very large because they are covering a lot of us and they might be covering several. Even in Kenya, if there is a big disaster, like we are fortunate, we have not had an earthquake here since the beginning of last century.
And I always worry about that. We know the quality of our buildings and then we've had these movements, tremors.
That's right.
Yes. So these are the types of risks you're thinking about, right?
We are, to me, the biggest worry would be an earthquake.
An earthquake.
That would be the biggest worry, because that's the only thing right now that would be a natural disaster for Nairobi. Storms and others we don't have to worry so much, but earthquake is the one that we have to really worry. Yeah.
Ashok, can I turn now to, obviously, we've been talking about insurance on one side, but the nature of insurance business is that you have a balance sheet, that you're making investments which are generating returns to meet possible liabilities in the future and so forth. I saw a report out by the actually a fund management group who was saying, if you look at the pension fund business, you look at the fund, we are heavily overweight government bonds. That the average portfolio is now at a 2-year peak, 39%. Is this true? And
It is true. It
and
is
and
true.
how are you navigating? What must be an oil tanker of assets that you got to keep on top of? What's
Um, we have a major problem in that area right now in this country. Uh, for anybody like us who wants to be a prudent investor to look after other people's money, uh, we have very little choice in to put where our money is. And as you said, which is perhaps very, very wrong for all of us, not only us, but even the banks and
Well, the
everybody else.
banks, I mean, that's the one number that goes up every
Every,
single quarter.
and we are only putting our money in the government bonds.
But isn't that a possible negative feedback loop that could happen if there was a downgrade, God forbid, or anything? How do you look at it?
No, we are worried about. We are worried. Generally, we are worried that if there's a downgrade or anything like that, that Kenya would be affected. But there is one thing that we also take into consideration, is that most of most of the covers we are given, the retirement benefits that we are insuring, are all in Kenya shillings.
So you're matching the asset
Yeah,
and
we are matching
liability.
the assets. So what
Okay.
happens is, and we certainly feel that while we have started borrowing too much, both internally and externally, we still feel that for us, the government bond is perhaps the safest
Yes.
than anybody else. Because what happens is that hopefully the central bank and the national treasury are managing that well. But if you look at it, on the commercial bonds, so many people have lost money.
Big money. And
Yes.
I mean, doesn't that tell us that our people didn't understand credit? Because I
Yes.
remember being at a dinner party, Ashok,
Yes.
and somebody telling me I've bought Nakumat's bond, and I said, "Oh, what's the interest rate? 24%."
Yeah.
And
Um,
if you follow banking, and no disrespect to Nakumat, but if you follow banking, typically when people are paying these sort of mouth-watering interest rates,
that's
it's
right.
normally a clear stress signal. So
Yeah.
what explains some of the losses in your industry that people have been reporting?
I just don't understand. At APA and Apollo, we have a policy. There is a strict policy that there are certain, we will look at any commercial paper that is presented to us. We'll look at it quite seriously. We'll look at it. We will analyze it. And what's happening is that, and when somebody is saying that they are going to give us 15% interest and so on, the first question we ask, why are they willing to give 15% when everybody else is only giving us 12%? So that's one
That's a way of
caution.
testing
That's
its.
one caution that we start with. But then we also look at the underlying balance sheet of the person who wants to, who has gone into, who has brought that paper to us. And we have gradually steered clear of any enterprises which are heavily geared, have a lot of, they might have a lot of debt and that they cannot pay. So we have fortunately not lost any money on
You haven't had a credit loss?
we have not lost any money
That's
on
a
any
that's
bonds.
a statement you should be
Uh,
proud. You should be singing
yeah,
from the rafters.
that's right.
Congratulations.
And the thing is that
So then
our
that speaks to a very robust investment committee
yes,
type.
we
Op-
have yes.
yeah.
And what has happened is that we were heavily geared to the stock exchange, and at that time, because of the heavy investment in the stock exchange, our pension returns were, in fact, for 2-3 years went down very badly. So we decided that we will change our investment policy, and right now we've got more money going into government bonds, but with a view that we will be looking at the economy as a whole. If there are opportunities that come when the stock exchange we think is ripe to start, again people's money is going and the values are right, then we'll put money back in there. But otherwise, until that time, we have a very limited horizon in investing in other.
I've got to ask you, because I got you here, you're saying that the one of the companies owns this real
That's
estate.
right.
There's been a lot of news about real estate. I mean, it was a sweet spot, wasn't it, for more than a decade?
Yes.
I think 300+% over that 10-year period, which really puts you up there. And tell us a little bit about your property portfolio and how do you feel about it and the overall market?
What has happened is that as an insurance company, you have to have property in your portfolio because property is a long-term asset. It normally keeps up with inflation. It also, even if there's devaluations of the currency, the property is
Compensates.
compensates for it. And also, what happens is that it will give you a long-term return. Uh, if it's like this, a property like this, we get a fairly good return. And but the thing is that we have to have a balanced property portfolio. We cannot have too much property, and in sometimes we think that we got too little property.
Oh.
But we've decided that we will only stick to what we have, and we've got about 3 or 4 plots which need developing. So we are now concentrating on them,
On
on
organic.
those. But we are not going to buy new land to just to what we think could be a speculation for property. There are people in this industry, in insurance industry, who have gone out who have been very bullish about property, and I think some of them are having
Extremely bullish, right?
they've been having a big problem. The companies which have had a long-term assets in their property portfolio and which are properly managed are still making money. But with the new investments that has gone into property, I think they are having
Occupancy levels are not
occupancy
there.
levels
These
are
are
bad.
iconic buildings which we're hearing are
Yeah.
40% occupied.
That's right.
Yeah.
And so obviously those are really going to be big, a big concern to those companies because they will not get the earnings they were expecting, and
And they might have to impair the assets.
the impairment will have to be borne by the shareholders, and also if it's like pension funds, they will have to also bear that impairment by value of their pension funds going down. And we must remember something about insurance pension funds. Insurance pension funds are guaranteed.
Yes.
If a pension fund is with a manager, segregated pension fund, you have to take the risk. Whatever the risk the fund manager takes, and if your pension fund value goes down, you in fact
Got to make up the shortfall.
no, they don't have to make up the shortfall. The contributor bears the loss.
Wow.
In insurance industry, when it's a guaranteed pension, everything that we have credited to your pension belongs to you. So we have to pay you that 100% of that contribution plus added interest to you.
Ashok, we're sitting here and we've got this ensuring happiness.
Yes.
Tell us a little bit about what that is, and because that's quite a bold statement. I mean, if somebody came to me and said, "Ali Khan, I can ensure your happiness," I mean, it's worth a lot of money, Ashok.
We are insuring your happiness.
Yes.
If you insure with APA, we want to make sure that you smile.
Yes. So
When
that's
you
the
have,
smile.
yeah, when you have a claim,
Yes.
we want to make sure that we look at your claim properly, and in some cases we might even be willing to settle a claim which might not be payable. But the thing is that we don't want to, insurance is all about paying claims. Insurance is all about making sure that the person who has taken the policy out with you is looked after. And we don't want to make it difficult for somebody who is insured with APA. If it's a genuine claim and it is payable, we would like to pay it very quickly. And we want to make sure that we put you back into the same situation you were before that claim, so that you will always be happy that you have actually insured with APA. And we would like to see you smiling. We would like to see if you are taken into, if you are insured with our health with our health cover, and you have to be admitted to a hospital. uh, I think it will be a trying time for the family. But with us, we would like to make sure that we will take care of you in that hospital. We'll get the doctors and the hospital to look after you, so that when you come out of the hospital, you are smiling. So we'd
Wow,
like to
so
make
quite
sure
a
that,
promise you're making, Ashok.
no, we would like no, we'd like to be, we want you. We are ensuring your happiness. Insurance is all about uh, being, that somebody is there to look after you.
That's right.
Yeah,
I
and
love the way you think about it.
this,
My final question is around philanthropy. I've seen,
yes.
I've seen a number of efforts, and I think you've got 4 pillars. Tell us a little bit about what you're doing and the thinking around that.
We have um, the, all our CSR
Mm.
is based on the fact that first our staff must participate in that charitable activity. We do not want to give money to somebody and say that just because we've got given them the money and then they've gone out there and done what they have done, and we take an account and put it in our balance sheet as something that we have paid out. We want anything that we do. We want our staff to be part of that philanthropy. Then the other thing that we have found is that who are the people who need your help the most? Children uh, who need education. There are parents who live in slums, whose children can't afford. They might be able to go to the primary school, but they might not be able to afford the fees. But what happens is, after the primary school, can they go into the secondary school? So we went to Chelata, which is in Runda. Now, one of the most prestigious suburbs of Kenya.
Yes.
And yet the Chelata school, no Runda resident.
Is that the school for, because I drive around there
Yes.
sometimes. There's a huge community of people who must be sitting on very expensive real estate.
Yes.
But they're serving runda, aren't they?
That's right, yes.
Yeah.
And what happens is, Chelata, every child in Chelata is from the 2 slums that are next to Chelata. And so we found that the results were not very good. The children were not doing very well. So we basically said that every year the top boy and top girl will be taken, we will give them a bursary to the fully paid 4-year bursary to a secondary school. We'll pay for everything. And we also then decided, as time went along, which school to take them to. We would not just allow them to go to any school. We would take them to school where they were able to produce results. Now, we only said that we'll do this for secondary school. Then the children who went through the secondary school qualified, then applied for universities.
Yes.
And when they applied for universities, they got into universities, and they came back to us and they said, I can't afford the university fee. So we then said we would look at each case, and we made it exceptional. We'd start paying for the university fees. But then during the holidays, they would come and tell us, I don't have anything else to do. So we started taking them as interns.
Wow.
So we
So
took
it
them,
became human capital for you.
yeah, so interns. And so some of them are employed with us now.
Yes.
So, they end up coming as interns, and they're learning the trade and learning the business, and they are employed by us. But the reason we went into Chelata was there is in the slums, there is the Runda Youth Sports Association.
Yes.
They have a football team. So they came to us and they said, could you support us? And we thought about it. So we started supporting the football team, which introduced us to the Chelata school. But the football team, they started playing the soccer in the Nairobi Premier League, etc. And through them, they also now, the the team captain, the coach, actually has also built up ties with Norway. So the 2 years running now he's been taking young children, 12 years and 15 years, to go and play a tournament in Norway.
Wow.
So every time he wants to take them to Norway, he comes to us and he says, "Can you give us some money?" So we've given them money. So these are slum children who would have never even gone into gone into a plane, have traveled overseas and played there with
I'm sure they had a smile on their
their
faces.
smile on their face. But then the other area that we really we concentrate on and we really make sure that we are there all the time is protecting our environment. And we regularly plant trees. We won several trophies on planting the highest number of trees in the country. But each of our branches are, asked to go and do that. But the pet project, which is perhaps the most important to my heart as well, is to provide water to communities. And since 2006, we have been building sand dams mostly in Okambani, Machakos, Makueni, and Kajiado. Now, what happens with the sand dam is, all these places are semi-arid. They don't have constant supply of water. The only time they have natural water is when there's a rainy season. The river is seasonal. The water is there for 2-3 days, and after that it's gone. So we have tied up with different agencies where we go and build a sand dam. And the sand dam basically first initially stops the water, and so the community has got actually water there for 3-4 months. But as time goes along, instead of the water is the sand that takes over, and the sand has retains 40% water. So we put a shallow well next to the sand dam, and the community can get water almost the whole year round.
Wow.
And instead of walking 7, 8, 10 kilometers every day to get water, now they got water on their doorstep. And
That's
what
huge.
we want to do is that we're waiting for our exemption, tax exemption for the APA Apollo Foundation. Once we get the tax exemption, we want to increase right now we do about 3 dams a year. They cost us in the region of 3 million each. We would like to do up to 10 dams a year once we get tax exemption. What we'll do is we'll then approach friends, companies that we deal with, supporters that we have, and we'd ask them to look at a dam each. And each dam will look after about 300-400 families.
Wow.
And the area around the dam becomes green. You will find it's green all year round.
Wow.
Yes.
So you're bringing life to those.
Yes,
Yeah. Ashok, it's been a privilege talking to you today and taking us through the journey, and we really appreciate the time. And thank you very much.
Thank you, Ali Khan.
Thank
it was
you.
very nice.
It was very
Great to
pleasant.
talk to you. Yes.
That was Metropole TV. That was The Smart Investor. My name is Ali Khan Sachu, and today with me was Ashok Shah, the CEO of Apollo Investments, describing a fantastic journey through the insurance world and so much more. And we really thank you, Ashok, for making the time. Thank you.
Thank you.